8 effect of applying the effect retrospectively, that how the retrospective application is done. And we'll also discuss the roadmap for Ind AS implementation. Retrospective application has a role to play in Ind AS implementation is the reason we'll be discussing them together, that what is retrospective application and how do we apply the effect retrospectively. So Ind AS 8 is the standard which deals with accounting policies, changes in accounting estimates and errors. Ind AS 8 is a standard for dealing with accounting policies, changes in accounting estimates and errors. It says that if there is any change in accounting policy, now what is an accounting policy? It is principles, rules, bases, conventions, or the guidance issued by the accountancy body which we use to prepare financial statements. So we choose an accounting policy on the basis of the options available or the guidance available through these accounting standards, or through the pronouncements of other standard setting bodies, or through industry practices if there is no standard available. So the change in accounting policy is guided by Ind AS 8 accounting policy, changes in accounting estimates and errors, that if there is any change in accounting policy, it is applied retrospectively. It is applied retrospectively. What does it mean? Retrospective means as if we have been doing it, as if we have been doing it since beginning. Now, how do we prove that we have been using it since beginning? Suppose we have to make any change in the current year financials. We are preparing financial statements for 31st March 2020. And we were using FIFO as a measurement basis to value inventories. Till now we were using FIFO. So last year financials were also presented on the same way, 31st March 2020. Last year 31st March 19, it was also done on FIFO basis, the valuation of inventories. Now we decided that we'll be moving to weighted average and we'll prepare financial statements on weighted average basis. So to prepare financial statements on weighted average basis, we need to re-measure. Now this year it was not done on FIFO. We are saying that we'll be measuring 31st March balance sheet on the basis of weighted average. Now to apply the effect retrospectively, the requirement is that we need to publish an additional balance sheet of the beginning of the earliest period presented. Along with comparative balance sheet. that we need to publish one more balance sheet of the beginning of the earliest period presented along with the comparative balance sheet. What does it mean? That if we are changing the accounting policy from FIFO to weighted average for publishing the financial statements 31st March 20, we need to present 31st March 19 also on weighted average, and along with that we also need to publish 1st April 2018 balance sheet also on weighted average. And how we'll do it? We'll apply the effect retrospectively, that since beginning or as far as it is practicable to do so, we'll go back and apply the change as if we have been using weighted average since beginning. So the previous financial statements which have been issued, suppose 31st March 2018 balance, which was published on FIFO basis till now, the valuation of inventories. This balance is changed to weighted average. Now this balance which was calculated on 31st March 18, this is published on 1st April 2018 as change in accounting policy, recalculated, and this is measured on 1st April 2018. 1st April 2018 it is measured under weighted average now. So automatically the recalculation of 31st March 19 will be on weighted average, and we'll be able to publish it this year on weighted average basis. Now this recalculation is done on cumulative basis. Suppose FIFO's valuation was 5,000, we recalculate the same since beginning, and we got to know that weighted average valuation is say 6,500. So what we did, we simply made an adjustment into retained earnings. We increased the value of inventories account. On the face of the balance sheet, inventories account is debited with a balance of 1,500, and against retained earnings this adjustment is done. Against retained earnings this adjustment is done 1,500. This is known as applying the effect retrospectively, that will make changes as if you've been using the same accounting policy since beginning. We'll take the difference and make the adjustment as part of, we'll bring in the adjustments as part of retained earnings. So whenever we change an accounting policy, or even we are applying Ind AS for the first time or changing the gap for the first time, all the adjustments are done against retained earnings. There is no other way of dealing with it. We make all the changes against retained earnings. This is applying the effect retrospectively and bringing in the change in accounting policy by publishing 3 balance sheets. This is current year balance sheet. The current year balance sheet is on weighted average. The comparative is on weighted average. One more additional balance sheet of the beginning of earliest period. The earliest period among the two which were presented along with the balance sheet of 31st March 20, the period which was the earliest period was beginning from 1st April 18 and was ending on 31st March 19. Among the two periods, the earliest period was beginning on 1st April 18. So of this date we presented one more balance sheet. So whenever there is a change in accounting policy, or so the 3 instances when we publish 3 balance sheets, there is a requirement of 3 balance sheets. 3 balance sheets are required whenever there is a change in accounting policy. whenever there is a correction of a prior period error, prior period means the current period is beginning from 1st April 2019 to 31st March 2020. This is the current period. Comparative period is beginning from 1st April 18 to 31st March 2019. So if there is any error which is belonging to the period before 1st April 2018, period before 1st April 2018 will be considered as prior period, and if there is any error belonging to it, any error in the prior period discovered now will be corrected by presenting an additional balance sheet of the beginning of the earliest period presented. The third instance is when we are changing the gap, means applying Ind AS for first time in that year as well, along with our first Ind AS financial statements need to publish comparative based on Ind AS and an additional balance sheet which is the converted balance sheet of the date of transition, which is the beginning of the earliest period presented. So three balance sheets are required whenever there is a change in accounting policy, whenever we are correcting a prior period error, whenever we are changing the gap for the first time. In that year there is current year balance sheet, comparative, and beginning of the earliest period presented. It's also known as beginning of the earliest period presented or beginning of the preceding year, the most recent comparative period financial statements published. Now to change in accounting policy and correction of a prior period error, Ind AS 8 is applicable. But to applying a gap for the first time, the standard applicable is Ind AS 101. That is first time adoption for changing the gap for the first time is Ind AS 101. Call it a facility standard because this standard, in the absence of this standard, if we would have applied a change in accounting policy or we would have corrected a prior period error, in the absence of this standard Ind AS 101, we had no choice other than applying the effect retrospectively, because this requires to apply the effect retrospectively. This requires apply the effect retrospectively. This also requires apply the effect retrospectively. Now, in the absence of this standard Ind AS 101, first time adoption of Ind AS 101 is the standard dealing with first time adoption of Ind AS, first time adoption of Ind AS. We had no choice other than applying or using the standard Ind AS 8, because the only standard available was Ind AS 8, which said that if there is any change in accounting policy, we need to apply the effect retrospectively. Now, whether we are changing the gap, we are using new recognition and measurement principles, that is actually resulting in change in accounting policies. So we would have been in trouble in trying to apply the effect retrospectively. So Ind AS 101 helped us with the transition and gave us relaxation in applying the effect retrospectively. So what is the relaxation available? The relaxation available through Ind AS 101 is that there are two kinds of exemptions given to apply the effect retrospectively. Exemptions to apply the effect retrospectively. So this made our life easy, that we could avail those exemptions to bring in the change and move on to the new gap. So there are two kinds of exemptions given. One is mandatory exemptions, and second is optional exemptions. Mandatory exemptions were for areas where applying the retrospective effect would have been irrelevant. For example, estimates, hedge accounting, settlements, non-controlling interest valuation, so there are some mandatory exemptions in 3 or 4 cases. Optional exemptions is, if you wish to apply the effect retrospectively, you can do so. But if you wish to avail the exemption, you can avail the exemption and carry forward the balances which were carried in the books previously. We have a choice in some instances to carry. Examples were like property, plant and equipment. Whatever was the carrying amount can be carried forward as deemed cost under Ind AS. Suppose there is foreign currency translation reserve. There is an option to reset it to 0. So these are the ways through which Ind AS 101 gave mandatory exemptions and optional exemptions, and gave a facility in the form of Ind AS 101 first time adoption of Ind AS. Now this standard is used in the life of an entity only once. Once they've converted to Ind AS, they are no more required to present or use this standard, because once this is used, there is no need for this. This standard is a facility standard used by an entity only once. Once an entity has used the principles of Ind AS 101, they do not need this standard. If they are already using Ind AS by virtue of the establishment or incorporation, or they got incorporated at a time when the accounting applicable was Ind AS, then they will not need this standard ever. But if an entity has been using a previous GAAP AS and if they move to Ind AS, they need to follow the principles of this standard Ind AS 101 first time adoption of Ind AS. This is helping us to move away from Ind AS 8 accounting policies, changing accounting estimates and errors, because in that case we would have to apply the effect retrospectively to each and every line item which we are changing or changing the accounting policy. In case of Ind AS 101, we are given optional exemptions and mandatory exemptions. Mandatory means we'll never apply the effect retrospectively. Optional means if we wish, we can apply the effect retrospectively. If we do not wish, we can follow the principle mentioned in Ind AS 101 and can avail the exemption available in Ind AS 101 to apply the effect retrospectively, and we can move on and we'll be able to present one more balance sheet of the beginning of the earliest period presented. Now in India, the date of Ind AS implementation was declared in G20 summit in year 2008. That India will be moving to Ind AS from 1st April 2011. Now this decision was the reason for my job in 2009, wherein I got a chance to train chartered accountants on the subject of IFRS, since I had studied IFRS into my curriculum in ACCA in 2008. I had no idea the accounting paper which I'm studying is going to begin my career into training on IFRS in 2009. Since then I've been training on IFRS, on diploma in IFRS, also could write a book on Ind AS Concepts in one day, and now got an opportunity to teach students in India who are going to appear for the CA final financial reporting, or whosoever is willing to become well versed in Ind AS. So this was a trigger, but this date was postponed, and in India the date of transition is actually 1st April 2015. The first Ind AS compliant balance sheet financial statements were published on the first Ind AS compliant balance sheets for financial statements were published on 31st March 2017. The first Ind AS compliant balance sheet was of 31st March 2017. Were published for the period beginning 1st April 2016. All the three statements are correct. The date of transition in India is 1st April 2015. The first Ind AS compliant balance sheets were published for the period beginning 1st April 16. The first Ind AS compliant balance sheet was of 31st March 2017. So when you read these statements, the statements are said that the date of transition in India is 1st April 15, but the first financial year, the mandatory application of Ind AS in India, mandatory application of Ind AS in India was for the financial year beginning 1st April 16. So the financial year is beginning on 1st April 16. The financial year ends on 31st March 2017. So if it is ending on 31st March 2017, the first Ind AS compliant balance sheet is of 31st March 17. Now according to Ind AS 1 presentation of financial statements, if we are publishing the balance sheet of 31st March 17, we need to publish the comparative balance sheet of 31st March 16. Now according to Ind AS 101 first time adoption of Ind AS, or even if we look at the change in accounting policy requirement, we are required to publish one more additional balance sheet of the beginning of the earliest period presented. Now among the two periods, this period is beginning from 1st April 2016 to 31st March 2017. The comparative period is beginning from 1st April 2015 to 31st March 2016 is the comparative period. We need to publish one more balance sheet of the beginning of the earliest period presented. Among the two periods, which is the earliest period presented? The earliest period presented is beginning from 1st April 15 to 31st March 16 is the earliest period among the two periods presented. The beginning of this is 1st April 2015. Is the reason 1st April 2015 is the date of transition in India. Mandatory date of transition in India. So this is making the statement correct. Date of transition in India is 1st April 15, beginning of the earliest period presented. First Ind AS compliant balance sheet is for the period beginning 1st April 16. If it is beginning on 1st April 16, it is preparing financial statements on 31st March 17. So first Ind AS compliant balance sheet is of 31st March 17. So all the three statements are correct. All the three statements are correct. So this is the current period. This is comparative period. And this is the beginning of the earliest period presented balance sheet, the first or date of transition. So these are the three balance sheets published when we are changing the gap for the first time. The mandatory application of Ind AS in India is for the financial year beginning 1st April 16 is the mandatory application of Ind AS in India. So this is a requirement for balance sheets only. There are three balance sheets published, but as far as income statement, statement of changes in equity, so according to Ind AS 1, Ind AS 1 presentation of financial statements, Ind AS 1 presentation of financial statements, the requirement is of publishing the balance sheet. Balance sheets are three: current, comparative, and date of transition. Current 31st March 2017, Comparative 31st March 2016. Date of transition 1st April 2015. Income statement is belonging to the periods current and comparative. Current period is beginning from 1st April 2016 to 31st March 2017. Comparative 1st April 15 to 31st March 16. Statement of cash flows, changes in equity. So income statement, statement of changes in equity and cash flows are presented of the two periods. Only balance sheets are required to be presented 3. The reason being, we convert the balance sheet of the converted balance sheet is the previous GAAP balance sheet is of 31st March 2018, which is on the previous GAAP. We apply Ind AS 101. We apply Ind AS 101, first time adoption of Ind AS. Ind AS using mandatory and optional exemption principles. We're successful in presenting converted balance sheet of 1st April 2018. Is the reason 1st April 2018 is the date of transition. So these are the financial statements published on AS. The 1st April is based on Ind AS. This is converted balance sheet based on Ind AS. In our example, it is 31st March 2015 is the previous GAAP balance sheet which was already published, balance sheet based on Ind AS. After we apply Ind AS 101, first time adoption of Ind AS, after applying these principles, we are successful in preparing a balance sheet which is converted balance sheet based on Ind AS. So once we have 1st April 2018 balance sheet, automatically the balances gets carried forward on 1st April 2018 which are based on Ind AS. We are successful in presenting the balance sheet of 31st March 2000. 1st April 2015 is the date of transition according to our example. 31st March 16 and 31st March 17 are automatically based on Ind AS. So in the year 2017, the 3 balance sheets are published along with the balance sheet of 31st March 17. There is a comparative balance sheet of 31st March 16 and 1st April 2015 balance sheet. This is known as applying the effect retrospectively under Ind AS. So we look at this example. Suppose there was FIFO being used and weighted average being used. We'll take the cumulative difference, recalculate it, and we get to know that on 31st March 2015, the weighted average calculation is 3500. On FIFO it was measured on 4,000. So if we need to change the method from FIFO to weighted average, we reduce inventories by 500 and make the adjustment to retained earnings. So inventories under weighted average are 3,500. So we reduce the inventories valuation and apply the change retrospectively by making the adjustment in retained earnings and present a new restated balance. If it is impracticable to apply the change in accounting policy, we'll apply the change as far as it is practicable to do so. If there's any change in accounting estimate, we apply the change prospectively. So that's the case in case of Ind AS 8. Change in accounting policy is applied retrospectively. Now there are three things: change in accounting policy, correction of prior period error, and third was change in accounting estimate. Change in accounting policy and correction of prior period error, the effect is applied retrospectively. The effect is applied retrospectively. Change in accounting estimate, the effect is applied prospectively. Retrospectively means we need to present one more balance sheet of the beginning of the earliest period presented. As if we have been using the same policy since beginning, applying the effect prospectively means in current year and in future periods. In current year and in future periods. This is change in accounting estimate. Change in accounting policy and correction of a prior period error are dealt with in the same manner. There is no difference. The effect is applied retrospectively. So is the reason when we are changing the gap, it was in line with change in accounting policy, but this would have been a cumbersome task. This would have become very complex. Is the reason a facility was provided in the form of introduction of Ind AS 101, first time adoption of Ind AS, which has relieving us facilities of mandatory exemptions and optional exemptions, which helped us into changing the gap. In the absence of this, the entities, the countries around the globe didn't agree to it because it was not easy to apply the change retrospectively to each and every item present in the balance sheet. In spite of these exemptions, this turned out to be a cumbersome and lengthy exercise when we actually implemented Ind AS in India. Prior period errors are dealt with in the same manner, believing that what if the error was, there was never any error, or error was corrected in such a manner that it did not exist, as if the error never occurred. So we'll make the change as if the error never occurred by applying the change retrospectively by bringing in one more additional balance sheet of the beginning of the earliest period presented. So how it actually happened in India, what was the roadmap for implementation of Ind AS in India, how it actually happened. As I said, the first date was in year 2011, but it was postponed, and then it was mandatorily applicable from 1st April 2015, though there was a voluntary application available from 1st April 2014. So this date is not the date of transition. This date is the financial year date. That Ind AS is voluntarily applicable from financial year beginning 1st April 2015. So we need to read very carefully. It is not the date of transition, it is the applicability in the financial year beginning 1st April 15. Mandatorily applicable in phase 1 in the financial year beginning 1st April 16. So my example has been around mandatory application in phase 1, which is applicable for the financial year beginning 1st April 16. If it is applicable from financial year beginning 1st April 16, what is the first Ind AS compliant balance sheet date? That is of 1st April 16 is the beginning, then ending is on 31st March 17. So 31st March 17 is the first Ind AS compliant balance sheet. In the phase 2, it was mandatorily applicable from 1st April 17, and the balance sheet was prepared on 31st March 2018 in the phase 2. So my example has been revolving around mandatory application phase 1. This is around mandatory application in phase 1, that we pick up the balance sheet of 31st March 15, which is based on Ind AS. We apply the change, convert it, and the converted balance sheet is of 1st April 15 is the converted balance sheet. We converted the balance sheet of 31st March 15, which is based on AS. We converted the entire balance sheet and presented the converted balance sheet of the beginning of the earliest period presented 1st April 15. This is just 1 day difference, which marks the difference between AS balance sheet and Ind AS balance sheet. So in phase 1, 1st April 2015 or thereafter, it's applicable from financial year beginning 1st April 2015. Voluntary Ind AS balance sheet was of 31st March 16. But mandatorily applicable was from financial year beginning 1st April 16, ending on 31st March 17. It was applicable to all the companies listed on the stock exchange having a net worth of more than 500 crore, all unlisted entities having a net worth of more than 500 crore, even parent subsidiaries, associates and JVs were also under the purview. Even the subsidiaries and associates had to prepare financial statements on the basis of Ind AS for the purpose of consolidation, because they had to facilitate presentation of consolidated financial statements also based on Ind AS. So mandatorily applicable from 1st April 16 financial year, which ended on 31st March 17. The first Ind AS compliant balance sheet was of 31st March 17, resulting in a date of transition of 1st April 2015 is the date of transition, which converted the balance sheet of 31st March 15. In phase 2, all the entities with a net worth of more than 250 crore and all the listed entities were required to present Ind AS compliant financial statements. In the phase 2, all listed entities, now today any listed entity on the stock exchange is required to present financial statements on the basis of Ind AS. All the unlisted entities having a net worth of more than 250 crores are required to present Ind AS compliant financial statements. Even their subsidiaries, associates and JVs also came under the purview. Banks, insurance companies, MBFCs, RRBs were also covered in the year 2018-19 and 19-20 in the same phases. In year 2018-19, all the banks, insurance companies, NBFCs, housing finance companies with a net worth of more than 500 crores were required to present Ind AS compliant balance sheet of 31st March 19. Banks, insurance companies, NBFCs, housing finance companies, all these which were yet to, mainly from the financial sector, their mandatory application was from mandatory application was for the financial year beginning 1st April 2018. If it is applicable from financial year beginning 1st April 2018-19, that means the first balance sheet was of 31st March 2019, which was supposed to be published based on Ind AS. Two 2017-18. March 2018 balance sheet would have been published based on Ind AS. Financial year April 2017 would have been the balance sheet based on Ind AS, which was the date of transition balance sheet. Or we can say converted balance sheet. The previous gap balance sheet was published on 31st March 17, which was based on AS. This balance sheet is converted, and the converted balance sheet was supposed to be of 1st April 17. NBFCs, housing finance companies, and other companies in the financial sector, except banks and insurance companies, had applied Ind AS beginning 1st April 17 or applicable from the financial year beginning 1st April 18. It was mandatory applicable from 1st April 18, so they published the first Ind AS compliant balance sheet of 31st March 19 is the first Ind AS compliant balance sheet they published. Along with that, they published comparative of 31st March 18, and date of transition in India for such companies was 1st April 18. Banks and insurance companies have postponed it for banks, insurance companies had postponed it as IRDA had declared that the new accounting standard on insurance contracts was applicable from 1st January 2021, which was postponed, and a new date has been issued after corona outbreak, that IFRS 17 insurance contracts will be applicable from 1st January 2023. So insurance regulator were very clear that if we implement Ind AS around 17, 18 or 19, and then when the new standard is issued, the compliance costs will be doubled and they'll be in trouble applying the Ind AS 104 insurance contracts now and in future when ICI publishes Ind AS 1117 insurance contracts. They'll have to implement it again. So they decided that they'll be implementing the new accounting standard IFRS 17 insurance contracts, which will be known in India as Ind AS 117 insurance contracts, only when it is globally implemented. So they will not be bothering themselves again and again by implementing first Ind AS 104 insurance contracts and then again transitioning to Ind AS 117 insurance contracts, which will be cumbersome task for them. Though they are publishing a note around Ind AS along with their AS financials as of today, but they are not mandatorily required to publish Ind AS financial statements. Banks were also supposed to implement Ind AS from financial year beginning 1st April 2018. So initially they postponed it with no date. Now Reserve Bank of India has declared postponement of Ind AS for an indefinite period. So no new date is given for implementation of Ind AS on banks. The main reason or concern area which I believe is the expected credit loss model of Ind AS 109 financial instruments, which is a big concern for dealing with non-performing assets. Position in the current financial statements. The current model is incurred loss model. With the implementation of Ind AS, this will change to ECL, that is expected credit loss model. Now the expected credit loss model is that if you're expecting any asset to turn into NPA, depending on the risk, if it is a high risk investment, we have to create an allowance today. The asset is not impaired today, but we'll need to create an allowance today on the basis of 12-month expected credit loss if it is less risky. If it has significant risk, then we need to calculate lifetime expected credit loss. We need to create a loss allowance today. Now this creation of loss allowance will result in heavy losses being booked when we are implementing this expected credit loss model for the first time, which is definitely an area of concern regarding the health of the financial statements of banks. So instead of implementing Ind AS, I believe we are looking for ways and mechanisms to improve the health of the banks so that our financial system doesn't come to a crash, as the common man will not be able to understand the mechanics of this accounting, which will have a big impact on the financial statements published by banks. So is the reason I think RBI has decided that they'll be postponing Ind AS for an indefinite period till they are able to settle these heavy losses or make good for them in some manner through mergers, through merging profitable banks with the loss-making ones, or presenting very few banks in the country who are able to maintain the financial system and help in smooth functioning of the finances throughout all sectors, trying to minimize the NPAs as much as possible and helping in settling them as soon as possible. So this is the current state of Ind AS implementation in India. This is an opportunity which every person working or studying in the finance and accounts should be aware of, because this is the first interview question. I think wherever you go anywhere on the earth, the first interview question for anyone dealing in auditing or accounting is, do you have knowledge of IFRS in India? The first question is IFRS and Ind AS. Do you have any idea or knowledge? Are you able to work on the financial statements based on Ind AS? Since all the listed entities are today preparing and presenting financial statements based on Ind AS, all the entities with a net worth of more than 250 crore in India, except banks and insurance companies, are preparing financial statements based on Ind AS. So it doesn't matter whether you are listed or not. If your net worth is more than 250 crores, even private limited entities are required to present their financial statements based on Ind AS. And when an entity is applying Ind AS for the first time, they are applying the change retrospectively. So hope the effect of retrospective application is clear, that whenever we change the gap for the first time, we need to present 3 balance sheets: one current year balance sheet, one comparative balance sheet, one more additional balance sheet of the beginning of the earliest period presented. This is the balance sheet which is actually the balance sheet which is the converted, which is the corrected balance sheet, which is the balance sheet with the changed accounting policy. We pick up the previous balance sheet of, say, 31st March 17 in the example in front of you. The 31st March 17 balance sheet is with the previous gap, or with an error, or with a previous accounting policy. So when we correct an error, when we change an accounting policy, or when we change the gap to Ind AS, we publish this converted balance sheet, corrected balance sheet, or with the new accounting policy balance sheet of the beginning of the earliest period presented. In the example before you, if we are making this change for the first time for the financial year beginning 1st April 18, and we need to bring this change in the balance sheet of 31st March 19, along with the balance sheet of 31st March 19, we need to publish the comparative balance sheet of 31st March 18 and a third additional balance sheet of the beginning of the earliest period presented, which brings about this change. This is how we apply the change retrospectively for change in accounting policy, for correcting a prior period error, and applying the gap for the first time. So we should thank Ind AS 101 first time adoption of Ind AS for helping us to apply the change retrospectively with the options available of mandatory exemptions and optional exemptions. So we were able to implement Ind AS in India. It opens up the doors of opportunities for aspiring chartered accountants who will be studying Ind AS as part of their curriculum now. Now for the first time, CA final students are also studying Ind AS. They were supposed to be tested in May 2020, but due to the postponement in exams, November 2020 will see first mandatory testing of Ind AS, so which also gives me an opportunity to share my insights on Ind AS with aspiring chartered accountants. The knowledge which I've been sharing to chartered accountants since 2009, since I was serving in the corporate, and this is an opportunity for me to share the insights on Ind AS with the students who are willing to be the torch bearers of accounting tomorrow. So with this, I come to the close of the session. Thanks for your valuable time. To subscribe to my courses, you simply need to use the code ACCA Amit, and would request to have a look at the special classes or the courses offered by me on Unacademy with the name ACCA Amit Kumar, and you can use the code ACCA Amit to get maximum discount on Unacademy for subscribing to my courses. So with this, I come to the close of the session. Thanks for your valuable time. Thank you.